Jason here from Fix My Books and Canada exit taxes. Another question, what happens to my rental property in Canada? Presumably they meant when they leave Canada. So when you cease to be a resident of Canada and have a rental property in Canada, there are certain rules and filing requirements that are going to apply. So the rent that you're receiving as a resident is now treated differently when you're a non-resident. So as a non-resident, you're subject to a 25% withholding tax on the gross income or gross rental income from your Canadian property. And the payer, which is the tenant or the person receiving the rent, the property manager, they're usually going to have to withhold this tax and remit it to the CRA by the 15th day of the month following the month that you get the rent. So you can elect something called a Section 216, and this is a return to report your rental income, and it's going to allow you to pay tax on the net rental income instead of the gross rental income minus that you're usually going to have to pay the tax on. So it's going to take the gross rental income and minus the allowable expenses for you to do the withholding tax on the net rental income. And this election can potentially reduce the tax liability that you're going to be met with. And, if it's obviously a loss, you're going to be entitled to a refund of the withholding taxes based on what was withheld from you. So you also need to file something called a Form NR6. And so if you elect under Section 216, you can also elect to choose to have the tax withheld on your net rental income instead of the gross amount by completing this form. Not a very complicated or long form. Most of these forms are actually quite short, but there are filing deadlines that you need to meet each year. So the NR6 must be sent to the CRA for approval before the first rental payment is due each year. It's a very, very tight deadline to meet. And then you've got other filing deadlines. So the Section 216 and obviously you've got the approval for the NR6. You need to file your Section 216 return. So it's the Form T1159 by June 30 of the following year. And if you don't file by the due date, your election is going to be invalid and you'll be subject to the non-resident withholding tax on the gross rental income. You're going to need to gather NR4 slips, which show the amount of rental income and non-resident withholding tax that's been applied. And these slips are going to attach to your Section 216 return. So obviously all of this can get very complicated very quickly. Some property managers deal with this. There are a lot of accountants which exclusively dealing with these rental property incomes that were received, and they just focus on this. I know several practices where this is all they do, and it is quite complicated. So if you are stuck on this, feel free to reach out to us at Fix My Books. My name is Jason, and if you know of anyone that's kind of struggling with this situation, feel free to send this video to them, and also don't forget to like, share, and subscribe. Thank you.